Good morning, everybody. I'm sorry I wasn't ignoring folks. We are live on YouTube, and it is Thursday, June 1st, at about 9:42, and the markets are off and running. I'm sorry, I was actually on the phone. And Simon, if Simon's still there, we have a Simon Emery. Simon, he says, "Why am I the only person viewing right now?" Thank you, Simon. Actually, I think there's two people there. I thought there'd be more viewers for this channel by now. Um, well, you know what? I would think so too, but a couple of things. Um, we don't advertise, so I don't advertise. Um, we're small, so it's a miracle that you found us. Good for you. And our attitude too is that what we're doing probably isn't meant for the masses because it you do need this is learn to trade your game. The masses may think that this is some sort of a game or some sort of automatic ATM. It isn't. We're mechanical robotic traders. So yeah, but I suppose if I put myself in my caddy suit and showed a little cleavage, I'd have about 30,000 viewers. Only kidding. You know, um, yeah, YouTube, internet. But thanks for coming by. If you have any questions, don't hesitate. When it comes down to it, when you really Yeah. I don't know. I hope I didn't offend anybody. Everybody gets offended these days. I don't think so. But what was I going to say? You get to a place where it doesn't matter what anyone else is doing in the market. Used to have a close person to me that would say to me almost every day in the beginning, in the early years, and say, Don, who is buying this stuff? Who is doing this? Who is selling this stuff? And I would try to answer that question. Um, you get to a place like, who cares? So who cares? Simon, you're here. Um, we're here. If I can answer your questions today and help you, whether you become a member to Stock Market Academy or not, I can answer one or two questions that can illuminate something for you and help you in your trading. Hallelujah. And who cares about the rest of them? I mean, the stuff that people watch online and crowd in, it is shocking though. It is, right? I thought when we would go live with Swing Machine, I mean, we had I don't know if you were here on Monday, Simon, you can see some of the live views. We posted close to $3,000 and we're doing that not to demonstrate a specific anything. We do these to demonstrate what is possible, right? So there's a distinction, at least in my mind, and I try to take the time to make sure that I explain that to everybody. We're trying to show what is possible. But yeah, you would think. In fact, there's another young lady. She's probably here at Tina, and Tina's been with us a long time. Not as a member yet. Hopefully, she says she's going to join eventually, but that's okay. And she likes to come by and she's like, Don, I don't get it. I can't for the life of me understand why there aren't more people. But let me show you. And I'm happy to answer any questions you might have. Right. So I won't re I won't automatically repeat things because maybe people know, right? So if you ask questions and I will gladly answer them and illuminate for you. But let me just show you what is happening. This is Swing Machine. This is a robotic trading tool that my wife and I developed now more than 15 years ago. Okay, it's a long time, right? And why don't we have 30,000 followers? It doesn't. When we built Stock Market Caddy, it was an afterthought, and we said we would do it if we just had one member. So and we've grown 20 or 30% a year, and with our membership, and it's been just fine, and it's been fun. It's great. Um, in fact, the person I was on the phone with too, by the way, it was our hosting company, and our site has just been refreshed, and they want to do all sorts of optimization to create, more awareness for us, right? So we haven't done anything like that, right? Maybe we should. And that's what he was talking to me about. And I'm like, okay, I'll listen. All right, so let me show you some things though. First thing is, in Swing Machine does not use moving averages. It doesn't use any of the traditional stuff. Some traditional stuff is good, right? But a lot of it isn't. The first thing is look at the VIX right here. See the VIX? Oops, I don't want it that fat. That is in a short mode. It means that it's okay. It's starting to rise now. We're getting in a rip. Okay, so this is a little problematic for anyone shorting in here, because we'd really want to see this one green and long. But the ES contract right here, you can see if a member had taken that trade at 750 short at 41.97, that's how much they're up. This is on a 5-minute interval, 5 minutes ago. And then this one here is at 9:30. It's a little bit later. Usually they're right at about the same time. Look at the Dow, right at the same time. See, these markets are commoditized. 720. So you get 720, 750. And then we'll get the Russell, 750. This happens all the time. These markets, thousands of stocks, they move many times within minutes of each other. And then, of course, gold is long. No, gold is not the right contract. I'm sorry. We had a power surge last night. GC, N, isn't it? No, I got to get the symbol. Let me get the current contract for gold. Just, you lose me for the minute, then get updated. Tell you in a minute. By the way, the CME is running a traders challenge, and starting on Sunday night, and we have entered that. We've done it before. In two of them, one of them, there were 1,400 competitors. It's GCQ, and we finished. Oops, 20, number 20. Oops, better pay attention here. GCQ 23. All right, so what I can do is, data, add a blank row, data, add a blank row. Let me put this in here. GCQ 23, we'll slip these in. Oil was wrong too. GCQ 23. I'll just focus on what I'm doing here so I don't make a mistake. 1 minute. We can change the intervals from time. You can even use tick count. And let's get oil in here. We can get some of oil, CLN23 and CLN23. There we go. So yeah, and now I'm out of position on those, but that's okay. I'll actually erase those. So we're not, oops, there we go. Oh, and this guy is out of position. Let me see if I can fix this. What we do is we try to dress it up using the Zoom. So make it a little bit more organized for folks. And now the other piece too is we don't do this every day, right? So that could be also, right? I suppose if we did this every day and only had 2 people, we don't. We do this. We do have a live session for our members every day, but we're not on YouTube. We don't do this all day, every day on YouTube. And, we'll do it. It's a spot view. So, that could be too, if you're trying to drive YouTube viewership, which is not really our goal. Our goal is just to create some awareness of who we are, what we're about. We're not trying to draw, I'm not trying to get necessarily viewership on Google. Like I say, otherwise I'd be putting pictures of models on the cover and whatnot, and the world's going to end, and all those headlines, right? But so we will enter into that contest next week. But Swing Machine is a trend identification systematic approach, right? But it isn't the only tool. It's one of about 70 that we use. And we draw a distinction, put that in here like that, between discretionary trading, mechanical trading, robotic trading, and robotic hedging. So Swing Machine is doing its thing. We're not trading it today. We're letting it, we're seeing it and commenting on it. The program that we are running, though, is this one, SMC Trend Seeker. This is a trading robot, and that is running what you see up here. And is for better or for worse, is posting this. And this is what it's done overnight since midnight. Now, we can tell you, we did this if you go and look at our live session from yesterday and from Monday. We were on YouTube much of those days, and we're going to do that this week in celebration of our new website and create a little awareness. But again, just to set everyone's expectations, we're not going to be doing this every day, all day on YouTube. Our members wouldn't be too crazy about that. But our members, though, they, just so you know, they can patch in to a live Zoom and reach us anytime. Whenever our computers are up, we have our Zoom links. We even have a second Zoom for where we do what we call the Q School and do individual teaching, mentoring. But they also, the annual members, have all of these tools on their desktops, so they can build their own desktops and trade, play their own game, so to speak. And so let me share with you what this strategy has done since Tuesday. Monday was a holiday. So I'm going to go into the TradeStation trade analysis, and I'm going to run a report, and I'll be able to tell you. And we got to go back. Let's see here. We get months here. There we go. Okay, so this strategy has produced not inclusive of that little drawdown that you're seeing up there, running one mini contract, $2,530. It has a profit factor of 2.87, meaning we made $2.87 for every dollar we have expended or spent on losses. And the number of trades, we have had 8 trades, and 75% have been winning, which is above where the model is. We can also tell you that the average time in the trade, so it's not that active, it's not a super active strategy, is 2 hours and 26 minutes, averaging about 2 hours in a trade. So we'll take it. So she's experiencing this little draw, and it is what it is. Now, we never know, but I'm happy to answer any questions. I'm not going to be chatting all day, but thank you for that question, why we don't have others. And it is what it is. But again, we're not we're not going to be running we're not running a trading room. We're not running a we're not trying to get 500 or 1,000 people, viewing, we're not. We're trying to reach those people that are interested in trading as a business for themselves and want to get out of the realm of discretionary trading. We've done this before. Most people start their trading in a discretionary fashion. They're trading what they see, what they hear, what they think, or worse than that, what others see, think, or hear. And they start there and they end there. We're trying to move folks. It's important to have good skills to do that, but to do it day in and day out can get old very, very quick and very, very frustrating. And it can be debilitating. What we try to do is move people from that realm, help them in that realm, but move them to becoming mechanical. And then from mechanical to robotic, and then from robotic to robotic hedging. And maybe we'll even do that tomorrow. And that's, where we spend hopefully the rest of our lives, is in the realm of robotic hedging. But most of our members will bounce between mechanical and robotic and mechanical, where they can intervene. And so they're not like, oh, you know what? You know what? I think Amazon's looking pretty good right now. Hey, you know what? I'm going to go get a call on Amazon. Woohoo! Wow! Oh boy, I made 30% on my Amazon call. Yeah, right. Let me get on social media and tell everybody about it. Yeah, they're not doing that. When we're getting in, we're getting out, we're getting our days started early. We're getting our weeks started early in terms of trying to quit early. Now I'm here all the time because I love this and this is what we do. And I love peeling back the envelope and I love showing our baby, right? And our babies. Now we trade not just futures, right? But we do trade futures primarily intraday because they're highly liquid, they're leveraged, and we can move in and we can move out. Liquidity is very important. When we go overnight, we go out 2-3 days, 2-3 weeks, and go out further, then we use options, and to define our risk. And we have now you can use Swing Machine on all kinds of markets and stocks and intervals. Now, we had somebody the other day ask us to punch in NVIDIA and Broadcom, and I'm happy to do that. If there's anybody here that wants us to patch in a specific market, a specific stock, and you want to see how Swing Machine is positioned, when it did what it recommended doing, it's perfectly time stamped. I'm happy to do that. Okay. So otherwise, I'm going to just kind of enjoy my coffee. I'll be here. I'll answer any questions and let you just watch. And if Simon's still there, Simon, how long have you been trading? What have you been trading? I'm curious, and how do you go about making your decisions? Feel free. And again, this is your opportunity, everyone's opportunity. Oh, you're very welcome. You're very welcome. I'm here. I just don't, you don't want to bend anybody's ear, um, and or repeat. A big thing, Simon, is which and I don't know. I don't know you. I don't know your level of experience. Most people that are on the internet and doing their thing, they at the most basic level, um, they don't even understand how to keep score. And it's okay, and it's not their fault. It's just that no one's ever explained it to them. And they don't, the asset gatherers and the money managers, they don't want you to know how to keep score, because if you did, it would be, you would hold them to account, and they're not interested in doing that. Um, when we're trading for ourselves and trading as a business for ourselves, right? I'm not making specific recommendations to buy or sell anything. I'm not soliciting funds to manage. So I want to be very, very clear there. We're a mentoring site, and we provide our members trading tools to for them to get the job done. But the way that we keep score is something called profit factor. Profit factor. And what you do, if we ask most people, they'll say, well, I just keep track of the money. You know, if I make $5,000 one week and I make $1,000 the next week, then I know what I'm doing. And we would deposit that no, you don't. That if a person is trading the money and keeping track of just the money, then they are in essence trading greed and fear, and they will lose. In Madison Avenue and Wall Street have that figured out, and they know that, and they will. So then I'm asked, well, then how do you keep score? The way that we keep score is something called profit factor. So as an example, if in a given week you have gross profit of $10,000 and you have a gross loss of $5,000, your net is $5,000, right? 5,000. If you take your gross profit, 10,000, divide it by your gross loss of 5,000, it gives you a profit factor of 2 to 1. Means you made $2 for every dollar that that you expended, that it cost. That's called profit factor. When you have a profit factor that's under 1, you are a money losing machine. You are not making any money. And see, it's a great well, I'll discuss it as an equalizer. If you are from 1 to 2, you're grinding, you're putting shingles on a roof, you're working really, really hard. If you're 2 to 3, we would consider that average. If you're over 3, you're above average, and you become a money-making machine. Now, why is it important? It's important because in this example, I said 10,000 and 5,000. That'd be a great week, right? But let's say next week I only gross 1,000, and I have a gross loss of 200, and I net $800. I'll ask many people and say, well, which week would you have considered have you done a better trading? And most people say, well, the week I made $5,000, right? Because I keep track of the money. I made 5,000. Jesus, honey, I only made $800 this week. Well, the truth of the matter is that your profit factor for the lower moneyed week at 800, your profit factor is 5. You made $5 for every dollar you lost. The week that you made less money, you traded much better. You may not have made as much money, but you traded much better. That's why it's important. It's an honest assessment, and it can help you understand what you need to work on, what you need to do. And it's an honest check as to your trading where the money isn't, right? So we all have that buddy that, you show up on the golf course, right? And the buddy, you're on the first tee, and he's, oh yeah, hey Simon, did you have a good trading week last week? Yeah, I made $10,000 on Nvidia trade. Yeah, I made 10 grand, everybody. I made 10 grand. He's telling everybody, right? And now Simon's a polite guy. He's not going to be like, okay. But Simon, what are you thinking? You think, yeah, he made 10 grand, but how much did he lose, right? How much did he lose the other weeks? He lost, 20 grand here and 15 grand here. He doesn't tell you that. So it doesn't tell you anything. it doesn't, he doesn't even know, right? And percentage return, that's irrelevant too. You got the other guy, I made 10% of my portfolio. They always tell you on the first tee, right? Maybe that, I made 10% of my portfolio last year. I'm trying to average down, I got a boutique broker and all that nonsense, right? Well, 10% return, yeah, if you're Warren Buffett and you got hundreds of millions of dollars, I guess, that's going to work. But 10%, what is that? I mean, you know, on what? They have a $10,000 portfolio and in a year's time he made $1,000. Okay, good luck with that. Let me know how that's going to work out for you. Oh, I'm going to compound it, bagger. All right, I we get that. We know about the rule of 72, but it doesn't day in, day out percentage return doesn't do it for you. It can give you a false sense of advancing. So, the money doesn't tell you what you need to know. The percent return doesn't. Oh, and then I love this one. There's a guy out there on the internet, and he's got thousands, by the way, and he charges you for the risk ranges. He charges you for this. He charges for that. He's got a crack macro team. He was a captain on the hockey team at Yale. You know who he is. And he's always saying, we win 90. You got an alert service. We win 90% of the time. 90% we got winners. Okay. Well, even win-loss ratios don't tell you anything because you can have a person win 9 out of 10 times, 90%, $1,000 every time. Whoa, what a system. What a system. And then on the 10th one, they lose 20 grand. Yeah. We can show this statistically. If you crank up the stop loss and widen it out, you dramatically and exponentially increase your win-loss ratio. In my view, it's a scam. So again, we're back to how to keep score. The money isn't a good idea. The percentage isn't a good idea. The win-loss ratio isn't a good idea. The only one is, in my view, the biggest one is that profit factor. And I've asked some of those people online and they block me. When they get their service, I'm like, can you tell me what? Now, they are soliciting funds. They are soliciting funds to manage and they are making claims. I'm not doing either. We are a mentoring site and educational site. So be very clear. So my profit factor, I can tell you what our profit factor is for this week as an example, and we can speak to it in terms of programs, but I'm not making any claims that if you run or you do whatever, that's going to be your profit factor. And the reason is there are too many variables. This is learn to trade your game. We may have a member, for instance, that took this trade at 750 this morning. He may have pocketed that $262.50. We may have another member that says, no, there's no reason for me to come out yet, yada, 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 and sticks around and later makes, 2 or 3 grand. So it's very individual. And you must have to use these tools and to use them successfully, you must have acquired trading skill. And the comparison I make is just like, if you go to Lowe's and get a skill saw, just because you have a skill saw doesn't mean that you can, make a staircase, right? Just because, you can afford to buy a small plane and it has an autopilot doesn't mean that you can, take it up and fly it around. I mean, I suppose you could. I'm not getting in the seat beside you. So, we have these tools, these robotic tools, and they're very good tools. And they make all kinds of decisions and they're very, very helpful. But you need to learn how to use them, when to use them, and how to optimize them. and measure them. So I hope that makes sense. If it doesn't, let us know, and I'm happy to chat with you. But it's really important. There's another saying, Wall Street. I get on these you know t tangents here, but I'll stay with it. Wall Street dishes out a lot of shit, and most of it is bullshit, and much of it is all geared to getting you to send them your money, getting you to just go work, get up, brush your teeth, shave, go to work, send them your money, and leave us alone. Not us. I'm not part of them. I'm not from there. I'm not. Nobody has more contempt for them than me. They say that what's happened in the past may or may not happen in the future. That is true. That is an old axiom from Wall Street that is in fact true. And then if you or me, I used to, and I asked myself these questions. So when we got started, I'm like, no, wait a minute now. Then, then how the hell can I do anything? How the hell can I do anything? How the hell can I make any decision on anything if what's happened in the past may or may not happen in the future? What value does anything have? And, we're running this little program, the Trend Seeker. Today is, I think what day it's because of the holiday week. So on Tuesday, it netted $2,700. Yesterday, we lost all day. All day, we lost $189. And today, we're having a draw. I don't know what it's going to do today. I don't know what it's going to do on Friday. I don't know what it's going to do next week and the week after that and the week after that. I don't know any of that. And when we look at this stuff, good God, it's all over the place, isn't it? Jesus. It's just incredible. I won't go there, but lost my train of thought. My dog does that. He goes out on the front lawn. Every day, your dog, you take your dog out, and you're like, "Well, what are we out here to do? Out here to." Oh my goodness. Lost my thought of where I was. Maybe somebody remind me. It was a point. I was headed someplace. I was headed. There was a point I wanted to make. I forget what point it is. There's so many of these different nuances. Oh, but they'll say, that what happens in the past doesn't happen in the future, right? It's an important one. So when you have a strategy, we have a trading robot, and we can plug it into a chart, right? And we can go back and we can look, sometimes with very good specifics and sometimes not, depending upon what type of chart. You got to be careful that it doesn't have some built-in spuriousness to it, right? And we can see what it would have done in the past, like over the last 2 to 3 weeks or the last 2 to 3 months. And it'll tell us, what is the average winning trade, the average losing trade, the average run up, the average run down. We can get all kinds of metrics on that. But then you might ask the question, and it would be a legitimate question. So I'll ask it. Well, what the hell good is that? I mean, if it isn't going to do that in the future, then what good is it? Why do you do that? What kind of crap is that? May not happen in the future. The back tests are important to us because they are models. They are models. And so what we do, I'll give you some insight here. When we have an idea, we have a concept, and let me see if I can put this out, and we run a back test here, and we get results, whatever this, I'll put in here, see if I can do this here. Back test, oops. Let me make this a little interactive here. And so that way I won't forget where I am. It's difficult because I don't see you, right? I don't see you guys, and I don't have the interaction, but so sometimes so I'll just put BR for back test results, right? So we have these back test results, and it gives us all this information. But then, what we'll do is then we're running in a live environment, and we'll make it green, the distinction. And so that's the backtest world. And then what we'll do is we'll be running in a live environment, which is what we're doing here. And we're running live. We'll just say live. And we're collecting the data, the performance characteristics of what we're doing. Not just the win-loss ratio, not just the profit factor, but we're collecting a huge amount of data. And then we're going to compare and contrast that with the back test. There we go. I didn't know it was going to do that, but I'm okay with that. It goes back and forth and back. Well, the back test says we should have such and such a profit factor. What did we do? The live, we have such and such a result. How did it do in the back test? So we're comparing it back and forth. And over time, now, on any given day, we can have a good day. On any given day, we can have a bad day. We have to be realistic about it, and we have to be patient. We have to be disciplined, and we have to know kind of what to expect. And we have to collect enough data so that it becomes meaningful. And I'll equate this also to golf. So then what happens is, let's say that over a 2-week period, the backtest says, if you run this strategy, Simon, you should make $20,000. Okay. Well, maybe you run for the next 2 weeks the strategy, and maybe you only make $10,000. You don't make 20. You only make 10. What that gives us is what we call the efficiency of the backtest. Let me see if I can get another little arrow in here. I didn't mean it. So we get the efficiency. And I'll just put an E in here, or E, for efficiency. So that means that if you're doing that over time and you're running a particular strategy, when you look at the back test, and the back test says, hey, you should be, if you're doing that now, you should make about 20 grand. You say, no, not realistically. Realistically, I'm only going to do about 50% of that, or maybe 10% of that, or maybe 5% of that. And then maybe you say, you know what, it isn't worth it. I'm not going to run that. I'm not getting that I'm not getting that result. And now we have a myriad of programs, and there's a ton of them. The market is dynamic. These programs are dynamic. And that, in that sense, it is very much like golf or football or any other sport. They're like plays. And, you're the coach, you're the trader. You decide, you're going to try to run a quarterback sneak, time and time and time again, or, you're going to do, whatever it is you're going to do. So you get to decide that. The thing that most people are trying to do is, when it comes to what we see a lot, when it comes to their trading, is they're trying to see something on a chart, and they're trying to duplicate that every single time. um, it's kind of pointless, because in golf it would be like the likelihood of a golf ball landing in exactly the same place, exactly the same way, on exactly the same hole, the conditions being exactly the same, and you're going to do exactly the same thing. I mean, it just isn't going to happen, you know. um, you're going to be, you know, some days you may be, 150 yards from the hole. I'm going to hit a 7-iron most of the time, but you know what? Maybe if the wind is in my face, I'm going to have to hit a 5-iron. You know, it's dynamic. The market is dynamic. You cannot triangulate a market. There's no cornering the market. And so we're not suggesting overfitting. Yes. Curve fitting. Yes. Um, that's where the efficiency comes into play. So what Simon is referring to is that if you have, you can take a, you can take a good concept, you can take a bad concept, you can fill it full of a bunch of variables um, that don't even make sense, don't even have anything to do with anything, and go back in the computer's memory and back test them over 2 to 3 weeks, would they call curve fit or torture the data, and to get you to present. So we got a lot of good, back test traders, right? Um, and it's kind of like having a person who is really good at golf on the driving range, but not so good in a live environment. Um, that is called curve fitting, or torturing the data. That will shine through, though. That's why we go through the process. When you begin to run live, you'll know it very, very quickly, right? Very quickly, usually. So you're right. Um, so it's something you want to guard it, but everything has an element of a curve fit. Why do it, right? That's the other piece. Like, why do it? The reason why we don't do it with everything, right? We don't necessarily back test everything, because a lot of things, but much we do, because what we want to do is try to capture the flavor of a particular market, with the idea in mind that maybe their computers are doing A, B, and C. And if we can capture that flavor, that tenor of that market, then we want to try to capitalize on that. So that also comes into play. Well, how far back do you want to go, right? Do you really want to go back if you're trading intraday? Some people may not even want to go back 2 weeks. They may only want to go back a couple of days. Some people go all the way back 6 months. I would say, you know what, for what we're doing, I don't really want to, I'm not interested in any of the data on the NASDAQ, what it was doing, 3 months ago, let alone, 6 months ago. It just, it's like two different worlds, three different worlds. Does that make sense? But you're right. You're right. The other piece to it is too, and I didn't expect to really go here. Let me just erase these. Is this idea? I'll just draw this out of boxes. Bear with me. So everybody starts in with discretionary trading. Discretionary. Just put a D in here. D for discretionary. Trading what you see, what you think, what you hear. Trading, and then people start trading what other people see, think, or hear, right? There are some very, very good discretionary traders. I think we're pretty good discretionary traders. That's where I spent quite a bit of time. I think we can help most people become better discretionary traders. I think it's important to be able to do this. The issue is when you try to do it day in and day out, become more active. So we see this happen a lot. A person could be they may be working another job, another career, and they get in and they do their discretionary trading and they do really, really well, really, really well. And then they retire, they quit their job, and they say, okay, now I'm going to become a real active trader. And they try to do it day in and day out, and they go to shit in a shingle. And it's very hard to do day in and day out. And so what we try to do is move people from that realm to mechanical trading. Mechanical. What's the difference? In mechanical trading, you'll have something like swing machine, could be another radar, could be any number of things. And the computer is sifting real time, sifting and making those decisions, and you're shadowing those trades. It's very mechanical. It feels mechanical. It may look mechanical, but to the person who's doing it routinely, it's just like a golfer, So a golfer, their swings look beautiful. They look effortless. But you know what? They're very mechanical. They stand on the ball a certain way. They grip the club a certain way. Their mannerisms, almost to the point of being superstitious. So we try to move people to this realm. And so I'll just draw this little arrow here. We're trying to get them to go this way. We spend quite a bit of time on that during the Q school that I, can't pack that out in a session like today, but give you an idea of what we do. Then we try to move them into this box. What's that box? This box is, I'll just put an R in here, is for robotic trading. What's the difference? Well, with a robot, the similar to what's going on up here, the machine has the trade. The machine is putting in the trade. The machine is taking out the trade. The machine could have all sorts of controls built in. It can decide profit targets, stop losses, or you can decide those in advance. They can be decided during the day. They can run fast. They can run slow. They can run certain hours. They have AI function in them. They're making decisions and doing their thing. It's a beautiful way to go. Now, it can be totally robotic. However, you can also intervene with the robot. So what we do teach, though, is for the most part, we let the machine put the trade in. We let the machine handle the losses, just as it did over here. If I intervene at all, usually it's just on the profit side. If I intervene at all, I'd prefer not. Then there are certain styles, certain suggestions about when to intervene and when not to intervene, and all that, right? So now all of a sudden, you can see us leaving this world behind. It's like this, and as you move into this world, there's a whole lot more questions coming up. There are, about the curve fitting and how to run these things, and and that's what takes, truly 3 weeks. It takes about 3 weeks. We probably even then don't cover everything, but we will answer all those questions, But so our members will live mostly between mechanical and robotic and mechanical, blend of the two. But we're not done, because then you can do something, Simon, called robotic hedging. And this is where you can ideally spend the rest of your trading life. Here you're using and it can be also, back and forth with the mechanical, but in robotic hedging, we're now running multiple markets, multiple timeframes, multiple strategies, and they're competing with each other, and they're hedging each other. And that was I always had a hard time understanding that. I knew what the word hedge meant was, but it was kind of like, why? I don't understand. If I buy something, I want it to go up. If I sell something, I want it to go down. Why the hell do I want to hedge it? The reason why you want to hedge is you smooth out your account volatility. Now, if you focus on an individual trade, you never really even focus or even are aware of your account volatility. Maybe at the end of the week you are, Maybe at the end of the month you are, but we want to be aware of it, every day. And we want to be able to smooth that out. I don't like the volatility that I'm seeing right here, right now, right? But I'm going to stay with it, and there are some things that we can do. Um, you know, um, so we'll see. But when you're robotically hedging, that's why you're doing that. Option traders do that all the time, right? When they do spreads and stuff, they're doing that to reduce the volatility, to reduce their cost, and that's why we do it. Now, the deal is this. Simon started all this by asking us how come there aren't, 1,000 people here. This takes time. This takes discipline. This takes risk capital. This takes a commitment. Most people, if they were to come in, they just want, oh, red light, green light, I buy, I sell. Okay. I buy, I sell. I make money. Put money in my account. Literally. They don't understand. They think they can go from not even being a good discretionary trader. They think they're going to go here, and there's no jumping the shark. I wish it was that easy, right? I wish I didn't have to practice a golf. I wish I could just watch one video lesson on golf and, go to the golf, tournament on Saturdays and with the boys and, shoot scratch golf. I can't do that. I wish I could, right? And I can't do it for you. This is Stock Market Caddy. We're here to help you. We're here to hand you the clubs. We can, point out some things, like a four caddy. They ever play golf up in the mountains? They have these things called four caddies. They have these blind par fours, not in Florida, but you can't see them. So when you play golf in the mountains, you have a four caddy, and they'll say, hey, you know what? You might want to aim for that tree over there. And, the green's right behind it. You can't see it. That sort of thing. But in the end, you've got to hit the shots. You've got to take responsibility for it. That isn't what most people want to do. It just isn't. And we know that. That's why, we do what we do to create some awareness. I'm in Florida. We've been doing this for years. We have home shows and boat shows and convention shows. I mean, all the time. I could go set up a tabletop display and show them. I'm not about to do that. I'm not, because if I did that to the person who's just passing by, this isn't meant for everybody. It just isn't. I don't think it'd be right. This has to be something you really want to do. It really is. Because it's a big time commitment. It's a big emotional commitment. It's a big commitment. And you just can't wing it. And we just figure that, we do our thing, we create a little awareness. I was thrilled when we first did this and we got a first person, it's like, and we've had some wonderful, success stories and we just figure those people will find us. And when they see and hear and they think it through, if it does resonate, we think it will resonate. If it does resonate, then, it'll work out. And that's all. And, as a mentor and a mentor, I want people, I want to help people, and I want the folks that want to do well, so I hope that makes sense, Simon. Kind of, you started that, you asked that question. So, we thank you. I'll erase that, but that's, just a little backdrop as to who we are. And the strategy is struggling here, and I haven't even looked at it. And so let me just go take a peek at what's. Let me look here. Yeah, we'll be okay. Yeah, she's not. This particular strategy is not super active, and So we're gonna stay with it though, and we're still positive. We're positive for the week. I know if somebody's coming in and looking like, oh, and that'll happen too, right? We'll show something and we're running a strategy, and if it's up like 2 or 3 thousand, suddenly, we'll have 10 people, go from 2 to 10, and they'll be there. And then if it starts losing, then we're down to like, 1 or 2. Oh man, because they're watching the money. They're watching the money. And if you're watching the money on your own trades, it's not going to turn out well. It just isn't. It just isn't going to do it. It is like I'm not a pilot, but I love listening to pilots and talk about different things. There are different things that they do that I identify with. And they talk about, when they need to fly with their instruments, looking just at their dashboard. And we have folks that can trade just from Swing Machine, not looking at a chart, not seeing the horizon. They can do that. And they talk about when pilots can get in trouble when they're listening to their inner ear. And traders can get in trouble with that too. Like, oh, this shit's never going back up, or man, this shit's never coming back down. It's like, oh, um, and that you have to practice that, right? I can talk until I'm blue in the face. I can't do that for anybody. I couldn't do it for Susan. I can't do it for Susan. Susan trades very, very differently than me. Very different. Um, I don't want to say very different. Let's put it this way. She's very risk averse. Very risk averse. So she's very quick to take her profits. Very, very quick. So it's very personal. You have your own trading personality. So I hope I answered that question. If you want us to plug anything in, any market on Swing Machine, don't forget, I'm happy to do it. If you want to see any of our other tools when it comes to options or anything else, we got a ton. I'm happy to do that too. And we'll let you watch. And our website, unfortunately, was down. What happened was we were upgrading our website. Everyone's heard about it, but I just mentioned Simon brought it up. And we had it for like 10 years and we went to update it, and the hosting company goofed us up. And so it was down for a couple of weeks. That's why they were calling to apologize and try to make it up to us. And so it was a little frustrating, but we're site's back up. So Simon, if you have had any past trades you want us to plug in, if you like to trade options, whatever, feel free, and I'm happy to, give you a view of, some of the things that we, other things that we have. We trade not just time charts, but point and figure, line break, Kagi charts, all kinds of things. It's beautiful. What's different here is that, we just get the systems to be presenting the trades real time. So you're not having to hunt and peck and get yourself in trouble, is the idea. Okay, sorry about that. I just had to, Susan also has an office here, so doing that thing. So a little recovery here on the strategy. I didn't like that draw, but now the other piece to it is too, if Simon's still here and others, and it gives you an idea, as we talk things through. Um, you know, I I realize some people are seeing us for the first time, so I repeat, right? So the folks who hear us, it's like, God, he tells us the same thing all the time. But these are just the basics of and I think that they're important because I think they also give you some insight as to how we look at the markets, how we approach the markets, and also give you an idea as to who we are, right? And we just didn't start doing this like 2 weeks ago, 2 months ago, 6 years ago. We've been doing this a long time. I'm very familiar with the Investors Business Daily. Great idea, Vector Vest. I'm very familiar with a lot of that stuff, right? And a lot of that stuff is just fine. Um, there's many ways to skin the cat, right? But when you want to do it actively, you better, you're going to want to have a discipline. You just are. You realize that very, very early on. And I don't want to see folks, get waylaid, but there are only four different ways to trade. You can trend follow long, trend follow short, counter trend and counter trend long, counter trend short. And those those trading styles have characteristics. And with those characteristics come expectations. And it's very, very important to understand the expectations of whatever it is you're doing. Now think about this because it applies to everything. If you get in your car for the very first time, you know, and you're not sure about what it is you're doing, maybe, as a young person, you're going to be pretty excited and you're going to be pretty, maybe nervous, and you take the car down to the beach to see the girls and the boys. And, and it's very, very exciting. And wow, I got myself there and the freedom and everything. And it's just, it's a rush, right? It's a dopamine rush. Today, when I get in the car and I go to Lowe's and I come home, I you know, I sometimes I'm not even sure I remember even being in the car, or even what route I took, right? I mean, it's an effort just to stay focused on, on my driving. So, um, when you're first trading, it's exciting. It's a rush. It's a dopamine rush and all of that. But, we want to get you trading to the point where you're just going to Lowe's. You're just brushing your teeth and you're just making money. And that takes time. And and you need to, if you're going to learn anything, I don't care what it is, you have to have an interest. You have to have a passion for that something, right? Because if you don't have an interest, why you're not going to learn it, whatever it is. And there's plenty of things that in life that I just have zero interest in, and I'm not going to learn it because I'm just not interested. But you also need someone, something, some book, person to make you aware of what it is you don't know. Because those are the things that you need to learn. And that comes back again to Simon's question. How come there aren't 1,000 people here? This I think is good stuff, right? We're having we're doing fine this morning on the trading. A lot of people want to be traders. They know everything, Simon. The young people today, they know everything. They don't need to learn anything. They just need to go buy crypto. Let me know how that works out. They're headstrong. They don't ask their parents anything. They don't ask their aunts and uncles anything. They don't ask anybody anything. The teachers anything. They know it all. So that's also, and you know what? That's okay. It's really okay. We need those people, and I need them in the market. They provide liquidity. Their money provides liquidity. They keep the game alive. Sorry, but that's, we need them. So when we set out to do this, I knew from the beginning we would never have thousands of members or anything. It wasn't about that. And we do this, quite frankly, and just what we do is pretty boring. But I love the Q schools, and I love when folks start turning a corner in their own trading, and it's fun. I hope that makes sense. Enjoy. We'll let this run. Last night there was just a ton of long call options, right? And boy, they all hit them. They they're a big. So what we're going to do the same thing that we did yesterday, and we get ourselves a hole. I don't want to add to it. So if you watch in the window, I'm going to actually put a break even stop on. I'm going to do this mechanically. I'm going to do it mechanically. I'm going to open up in TradeStation. They got something called the matrix, and I'm going to place a sell stop whereby if it comes back, and I don't know, we won't, we'll make at least 25 bucks. Okay. So when I load it, you see the little asterisk show up. So that way I don't have to grind on it. I don't have to be concerned. I don't want to let the strategy give back that profit and run the risk of another draw. Right. So now we were busy answering other questions. Maybe, um, could have done a little bit better. We did the same thing yesterday too, right? And it ended up the rest of the day, we came back and we were down about 100 or so. So, but we're gonna exercise good discipline here, and and see if we can get ourselves out of Dodge, or let the strategy help us get out of Dodge. If you got any other questions you want us to patch in, we're happy to, right? It's pretty boring. Pretty boring. Boring is good. And Jeff, I just want to mention to you, Jeff, you have a copy of this strategy, a beta copy. And we had a little crash last night, but it doesn't have any brakes on it. If you're using 3-line brake and use a stop loss, it may distort it. But I think some break evens in there, some profit targets, could really help things out too. So they're not built into the code yet, Jeff, but I've started setting up some parameters too. This one doesn't have it. I set them up last night to compare and contrast overnight, and the computer went down, so I don't have a view on it. But just to share with you, we will ultimately build some of that in there for sure. And you let me know if there's anything you want it built in. Keep me posted on your experiences. Good luck. It's not possible to trade without drawdowns, right? It'd be like trying to fly a plane without turbulence. Not possible, you know. And if you try to fly a plane without turbulence, um, you know, um, you're going to be frustrated. And if you ratchet your tools, if you I think the person, if you have an expectation that you can fly a plane without turbulence, if you think you can play golf without ever getting in a hazard, if in other words, you think you can trade perfectly every single time, every single day, every single time, and you try to um, ratchet your tools down to keep you out of the hazard, to keep you, away from the turbulence, then it it can be counterproductive. It can put you in more hazards. It can create more turbulence, and so that's also too why we try to show, so you get a glimpse, right? You get a glimpse. But and I understand, I truly do, how difficult it is for the new person. But you have a person, and you have others as well to kind of um, you know, commiserate with, if anything. And but as I said to Susie when she started, you're gonna have to trade your game, Susan. There's no point. I mean, if I can do Susan's trading and get the computer, then why have her trade, right? Why do that, right? So you want to do your own thing, right? You want to do your own thing. When we look here at what's going on, and do you recall even this morning I said, I think the Bears are going to have a little bit of a problem because the VIX, right? Look at the VIX. So let's mark it up. This guy, he's short. He's trending down at 915. That means that in the options market, they're not buying puts. No, they came in, they wanted to buy their calls. That's basically what that means. And when we look here at the ES, this is matching it with a 5-minute now. Now, if you wanted to trade 1 minute, we have discussions about that, but we'll stay with the 5-minute. We'll stay with the same interval. The ES went long at 1045. That trade 1045, you're up 75. The NQ went long at 1040, and you'd be up 600. The Dow went long at 1050, and you'd be up to 2.25. The Russell went long at 1040. Isn't that amazing? 1040, 1050, 1040, 1045, 5 or 10 minutes. Again, happens all the time, all the time. This whole notion that, it's a market of stocks and you got to be, no, it's a commodity. It's like lumber. It's like sugar. It's just money flowing in and flowing out. Yeah, there are some individual anomalies each and every day, each and every week, each and every quarter, but those are anomalies. There are now more ETFs, more exchange traded funds than there are stocks. And everyone is passive. Nobody wants to work at this. This is work, right? I mean, I love it. It's not really work to me, but it is, right? And then look at gold. Now we've been, and even oil down there. Look at gold, 840. There's a nice big fat one, nice big fat tuna. So you can see the little 1 minutes. Now the 1 minutes are the most sensitive, and we're getting a little bit of a dip. The strategy is running this guy up here. That's the strategy. It did take a loss earlier. It got on the wrong side. That's going to happen. It hasn't happened. With the trades this week, we've got 80. He's got an 80% win rate, which is pretty high for a trend following approach. We did load in mechanically a stop. If you look at that position up there, you see the little asterisk after the number 3, NQM23, and this little asterisk there. That little asterisk means that I put in a mechanical stop. So if that thing comes back and hits a profit of just $25, it'll come out. I don't want to add any more to that draw on my account, right? I don't want to see that get out of hand. Otherwise, then we'll just sit tight on it and see if we can. Now, I do know that the average winning trade on this strategy is about $1,100 to $1,200, and we get up to 965. Maybe I should have taken it, right? That would be, your call. But I felt as though it's still early in the day. If it got to be 1 or 2 in the afternoon, then I might be more apt to take that, just as we did yesterday, to do what? Knock down the volatility in my account, and I don't want to I don't want to finish my day, in the hole if I can help it, right? That's difficult to program, but it is something that can be taught, and that's what we're describing for you. And so we'll just leave this up. But if if the market is going to sell down, right? So there's really, and none of our members will be shorting this market right now, unless they're doing something else. I mean, I don't know, but there's no reason to be short. What would have to happen is the 1 minute would start selling here. I'll just mark this up here a little bit, show you. Let's see if I can get a marker. It would show up in here. Oops, I don't want that. Bear with me. There we go. It'll show up in here. Oops. In this area, in this area, in this area, the 1 minutes will start to sell down. And then the 1 minute would actually have to go short, go short, go short, go short. Those would be counter trends, but it isn't doing that. It's not even, so we just stay long. And we may be here for hours. We may be here the rest of the day. But there's no reason to be short. And therefore there's no reason for me to really come out. So I just got to stay out of the way. Now, if you're new and you're getting a dopamine rush every time your account goes up, or you're worse than that. See, if you get a dopamine rush on making money on an individual trade, then when you lose money, you're going to get a dopamine withdrawal. I don't know what they call that, but you're going to feel like crap, right? We got to get you out of that. You got to stop that. And we have to just practice that and show you and work with you to get out of that. Right? Those fighter pilots that are flying those planes, off aircraft carriers, they're not getting dopamine rushes, and, they're not fearful. They're not, they're executing, they're flying that son of a bitch, from that cockpit. I don't want to say they don't get a dopamine rush. They might, but they might. I don't want to talk over, but they're executing. They're executing. They've done it so many times. They probably don't, it's instinctual to them. They're highly trained, self-trained, self-taught. There's a mental aspect to what they're doing. There's a mental aspect to this. I can only describe it, right? It must be something you enjoy. And I'll say this, if the market is a source of frustration, a source of anger, if, we're all human, right? So I don't want to come across holier than thou. I'm not. But if you have frustrations in life, frustrations or whatever, this is not a place that is going to alleviate that. In fact, and if you bring that with you into this environment, very, very dangerous and destructive to do. Okay. Maybe, that we can't program, but I can describe it. When I play golf, I really need to have a clear head. I just do. Like, so if I'm, knock on wood, but in the days when I had to work for somebody else and I had to be on a conference call and I had to travel and I had to do their damn reports and I had to get on their, did I say conference calls? And I had to travel and I had to do all their bullshit, stuff that I thought was counterproductive. There are a lot of times, that I just, like anything, you're working with someone else. I just felt like it was a waste, wasting my time and effort and stuff. And if I had stuff like that in my head, even if I had the time to go play golf or something, I may not play that well because I just didn't have a clear head. Um, Trading, you really need to have a clear head. I don't want to add to it though. I'm just trying to, and so what we're trying to describe and try to show, it's very, yeah, hopefully very meditative, very, very quiet, you know, no TV, just quiet, just letting the market do its thing. I'm chatting with you. I don't know if Simon's still here. Um, Simon asked us earlier, how come we don't have, thousands of people? He didn't ask that. He was nice, but how come we don't have more people? Like I say, if I put a picture of Paige Sparanak on my live thing, probably have like 5,000 guys show up, right? That's okay. Um, so we got a nice situation going on here. I still don't see any reason to come out. So we're going to just let her run. Now I am aware, right? It's 11:18, 11:20. We got $1,000 draw. And of course, I could clean that up here. So, we get up now, and I do know that historically over the last 2 weeks, the average winning trade on this was about $1,100 or $1,200. So we're up there. So I got to make sure that we capture that. I don't want to tighten up the stop though. I don't want to, get in the way here. So if I see any reason to intervene, I will. Otherwise, we're going to just let it do its thing. But it's these columns here in the 1 minute where the selling pressure will start to come in at first. But there's no reason to short. Nobody should be short right now. No. Pretty easy, huh? It's always easier when it's green. Everything's green, right? It wasn't this morning, and we were okay with it. Maybe we had a lot more folks watching then. They were probably, all right, man, I'm not watching that. He's losing money. I'm not gonna. Oh man, I don't want to do that. Can't be losing that money. That's a problem, and that's why most people, they come at this thinking they're going to win every single time. They come at this thinking that their equity curve is going to go from peak to peak to peak to peak. They're never ever going to have a drawdown. That's not real. That just isn't real. So we are getting a little bit of selling here because of the draw. I am going to come in and mechanically close that trade. And we're going to I'm going to reset strategy. So I did intervene. And we're going to set up hopefully for the next one whenever that is. And so we're just down our account value. We're just down $200. So that's no biggie, right? No biggie. Beautiful way to go. Yeah, the reason I got a little bit of selling in here, and if we didn't have the draw, if we hadn't had the $1,000 draw, I would have left it alone. right? I would have let it go. But because we had that, it's an opportunity to, and I play, now this is me, right? This is how I like to play. Um, so if I'm on the golf course, and I am, I have a bogey, let's say I have a couple of bogeys in the first couple of holes, and it's early in the day, I haven't even made the turn yet. I'm not going to get super down. I'm not going to get paid. I got all day, right? I got all day to play a nice, beautiful round of golf. All I want to do, this is the way I think about it is settle back. Let's execute some shots, you know, let's, just hit some comfortable shots. Let's get a couple of pars, maybe grab a birdie. Let's be patient and see if I can get myself back to par, or if I'm playing a partner, playing against somebody, try to get back a hole and try to get myself back, in, to where my handicap is or whatever. I don't want to overspeak. I'm not that good of a golfer, but that's the mindset, right? Back to where my handicap is. So here we had that $1,000 loss, early on, that we took that one in the chin. And so I had the opportunity, we could have actually got it a little earlier, but so in any case, so the strategy is back on, and it's only 11:22, and that's fine, right? And while we're here, I can tell you where we are for the weekly running the strategy. We've been running it. Today is Thursday, right? So let me check the dates here. And so, yeah. So we ran it Tuesday, Wednesday, and today. And let me go run a report. Yep. I'm going to generate a report. So we running this strategy. Now you might want to write these numbers down, a couple of these numbers down, and I'm going to give you an idea. All right. So we have made $2,346. The profit factor is 1.98. Okay. So write that down, 1.98. We've had 10 trades, and our percent profitable is 70%. All right. Didn't get them all, but did all right. All right. So now, as an example, and let me also share with you the average winning trade. Let's see here. Go into our trade graphs. The average winning trade has been $676. And the average losing trade, I think, has been bigger than that. But let's see. The average losing trade is $795, right? All right. So now when I go in and I look at the back test over 2 weeks' time, remember some of those numbers, it tells me that the profit factor should be around 1.93. Well, we're at 2. So I'm running right on top of the back test after 2-3 days. And the percent profitable, see, and this is what's crazy, right? Because over the past 2 weeks of running this program 24/7, I would have made 16 grand running one, and I would have had a profit factor of 1.93. And my percent profitable is in the back test is 47%, right? And it's important to know because we're winning 7 out of 10 times. It feels pretty good. The reality of it is I have a shot at making 15, 16 grand over a couple of weeks if I'm prepared to lose 5.5, 6 times out of 10. So it's important to know that psychologically, right? Because if you don't know that and you start losing 5 or 6 times, you're like, oh, this sucks. I'm losing. Yeah, but on a trend seeking strategy, you're going to have you're going to have a lower win-loss ratio. Need to know that. The average winning trade over the last 2 weeks in the back test is 969. We didn't quite do that. The average losing trade is 475. So we're not quite there, in the back test. But so this is how we interact with our testing, right? It isn't about just getting a robot and just optimizing it and just throwing it on and go sit by the pool and, oh, I made money, I didn't make money, that it is interactive. We're printing out reports, we're looking at reports, we're measuring what might we do a little bit differently, and there's a ton of things that you can do, and a ton. I can't do them for you, but we can show you how we go about it. And then, it's up to you. It's up to you. Now we have quite a few members now. We've grown. So, I don't intrude. We get oil. We get oil. We said this, we told our members, we don't have the 5 minute here. Let's take a look at the 5 minute. We get oil. Yeah, she's actually just getting long. But oil was overdone on the short side, and they were all bearish on CNBC yesterday. I saw that, and we're like, no, we want to be taking some of the buys. This is a $2,000 trade here this morning on oil. It's a beautiful thing. So we're gonna wait. We're waiting on this strategy. So it's still running. Happy to answer any of your questions, right? So we're doing fine. We got a profit factor. We're running it too. By the way, these profit factors, if I'm trading discretionary, I'm making the decisions to go in and out. Yes, I want to have a profit factor over 3, because, 1 to 2, I wouldn't be feeling so good about myself. 2 to 3, it's a grind. So I won't trade that much. And I'll only do a handful if I'm trading discretionary. If I'm trading robotically / mechanical, then I really don't care so much about. I do care about the profit factor, but I don't care if it's 1.4, 2.0, because I'm not having to make the decision. I haven't made any decision to enter a trade this week. I haven't made any decision to take a loss this week. The only decision I made was I think we've only made one or two, where I've intervened and I've taken the profit a little bit early so as to knock down the draw. And then the only other decision is when I turn it on and when I turn it off. That's it. So it's not real, it's not, I don't have to be grinding. Okay, where's my next trade? Am I going to go here? Wow, look at that candle. Look at that moving average. Look at that MACD. Oh, the stochastic. Oh, look at this. Oh, look at that. Oh, boy, the trend line. Oh, man, what's this guy saying on CNBC? What's this guy saying on the Twitter sphere? What about inflation? Oh, I think I'll listen to this. I think I'll listen to that. Oh, my God. I have been invited to people's offices here in Florida. I have, not a lot, but then I've gone and I've watched, and scary. They got so much shit going on. Too many screens, TVs, too much noise. Like, what in the world? Looking at all this stuff, all this crap. Very, very, keep it very, very simple. Namely swing machine, right? Last night, we made a video view. I could show you. If anybody wants to see a sample of it, let us know. But just there were a ton of long option trades that were set up yesterday. It's hard to believe, but it was like, well, there they are. We have a radar that will, will populate that. In fact, here we can show you a glimpse. There was just a ton of them. Let me. It's called the SMC options selector. Here it is here. There's still a ton. Here they are. So this is another radar. Here are the stocks, and here they are. This is where we get, see all these here? They're all in the money. So put credit spreads, not every single one, but a lot of them. They were all there yesterday. And we can also on the dark side, let's widen this out here. Here are the short stuff. So I would be looking, so to give you, for instance, this is where we would go. So like Electronic Arts is trading at 128. It's telling us that I should probably sell a call credit spread. So I'd probably go in and, and sell a call at, provided they don't have earnings, sell a call at 130 and maybe buy a call at 135, something like that for 35 or 40 days and play for the pullback. But this is how we get our stuff. You want iron condors, you can just scroll this and there they are, all these iron condors. Because you see, when you're trading options, it isn't enough just to get the direction right. You got to get the timing right. You've got to get the implied volatility right. You know, and most people, they have no clue. And they're just buying and selling options. They have no clue what they're doing. Sorry, but they don't. Okay, so the program is still running. It's 11:45. And check this out, right? So 9:15, the VIX turns down. At 10:45, 10:40, 10:50, 10:40. 5 and 10 minutes of each other, the markets all go long without any regard to anything. 700, 2,300, 3,000, 3,800. $3,800 in available trade. Swing machine is putting you over the target, and gold 840 is 1,400, right? So, and here's oil 2,500. So close to $10,000. Not unusual for us at all. Swing machine is going to keep putting you over the target. You have to hit the target. You have to get the fish in the boat, and we will try to help you and show you, not on a trade for trade basis, but during our Q school, how to do this. But Swing Machine is a beautiful tool for doing that. It isn't the only tool, though, right? It isn't the only tool, and I'm happy to discuss, right? And we've been doing this. Swing Machine is 10 to 12 years old, right? We've been doing this long before there was Twitter, right? Stock Market Caddy came out of the ground in 2012. Susan and I have been doing this since the early 2000s. So if somehow, some way you found us, it's a small miracle, as Simon mentioned earlier. Like, how come there's only 1 or 2 people here? Well, one, we don't do it every single day, and two, we don't advertise, and three, my website doesn't have SEO and and all that stuff. So we're just small fry, and that's totally fine, right? Totally fine. This isn't for the masses. No, but if you're very serious about your trading, very serious about wanting to trade as a business and want to get in and get out, make your bread, there are 24 trade. If you trade futures, there are 24 trading days, or 20. Yeah, you count Sundays, and Sundays are a great time. There are 24. If you take Fridays off, which we suggest you do, there are 20. $100 a day, 100 is 2,000 a month. 200 is 4,000. You can do the math from there. So, it doesn't take too long, to get things rolling. It doesn't. You don't have to have, 10 years of doing this. We can't promise an outcome. We can't. We don't make any claims, but I will promise you this. We will work as hard as you, if not harder, during the Q school. And you will not look at the markets the same way. I promise you that. For better or for worse, you are not gonna, and you're gonna learn a lot, and you're gonna see a lot, because we lay it all out. The idea of the Q school is to lay it all out so that, as opposed to teaching one thing, one approach, we could, but if that one thing begins not to do so well for you, and then you come back to us, we could suggest this and suggest that, it could affect your confidence level. So we would rather lay it all out with you patiently over 3 weeks. Take our time. We say 3+ because we're going to work with your schedule, so it's not like, it's the 15th day, we got to stop. I'm not a dick. We're going to make sure that we cover everything, and that you're very, very comfortable. But we want you to see it all, so that if in weeks or months down the road you get a little frustrated with something, what Kagi is, and what line break is, and what impact, and right? There's a person, and he's selling one strategy, very expensive, much more, very, very expensive. And and he's made like about 20 different at least 20 or 30 different changes to it. And then he sells um all these different webinars to adjust it and everything else. It's like, no, we want you to have everything, and we want you to have the skill set so that we can go through that with you, and so that you know what you can do, right, and what can impact. I used to have the numbers right here. I don't have them right in front of me, but like one of the things is, if you tighten up your stops, um, it can adversely impact your win loss. And if you widen your stops, widen them out, you can dramatically increase your win loss ratio. Now, that may or may not be a good thing. From a marketing standpoint, though, people will do that. And so what did my dog just do? What are you doing, Ted? You being a silly boy over there. He's looking at that pool. But so I'm happy to answer any question. But we're having a nice morning. And if you were here this morning, I commented on this at around 9:15. I said, I don't know. The market was selling down. I'm like, we need this VIX to turn and get going up. Otherwise, there could be a little bit of a bear trap. It turned out to be just that, measured in hours. Now, this could continue all day. It could. If it does turn around, the way it's going to turn, what you're going, let me describe in advance. So if you're watching this, what you'll see is on the 1 minute, on the S&P, the NASDAQ, the Dow, and the Russell, all of them, you'll start to see these little boxes here on the 1 minute start to turn red. This one here, this here, I'll mark it up. This one right in here, this one here. They're not there yet, right? And they'll start turning red. And what that is are the machines at the hedge funds in Chicago and whatnot hitting their trailing stops. And if it sustains itself, you'll start to see this one, this one, this one, and this one on the 1 minute. They'll go into a dip mode. If it continues, these could actually reverse and turn red and go short. Now, our members won't, in the beginning, won't necessarily short it. You can, but I wouldn't suggest that you do any of this on YouTube. But just describing what'll happen. And then if it stays fully sustained, then the 5 minutes will go into a dip, and then they'll roll down too, right? The code is written in a circular fashion. So it really can't get by us, right? It's just, you have to stay at this long enough to know, like, can I believe my lying eyes? If you have any baggage in your head about what the market is going to do on a given day or at a given moment, you got to get over it. You got to let go. You just do. I don't know, right? I can't tell you. I don't want to tell you. I don't know. I need, as a shortstop, I need to be able to move left or right. You need to be able to move left or right. You cannot be encumbered with any kind of preconceived bullshit. The moment you start shaving, I mean, we can do this with programs, but if you're playing shortstop, and you start shaving a little bit to third base, and then he punches it up the middle, he's going to get past you. If you start backing up and start playing a little shallow left from shortstop, a little ground ball he's going to get the first. So you got to be very careful, and if you're trying to do that mentally, discretionary, you're going to get caught. So we don't. And so you don't hear me saying, I think at 2:00, I think the market's going to do this and I think the market's going to do that. No, I just stay very, very relaxed and very much in the present. it really is, it's almost, it is meditative, really is meditative. The mind wants to think back, right? That's the way we remember things. And the mind wants to look forward because that's what we do, right? We recall things in the past and we look forward to the future so that we don't get eaten by a lion on the Serengeti plain. But we have a very hard time living in the present. Very, very important as a trader that you live in the present. But you need to have the tools. That's why we keep Swing Machine here. It's very meditative. It really is. And it just, I can see instantly, and it talks to me in English. And these other tools over here, we're not going to get into an in-service on this, but they're telling me information very similar to what a pilot would do, right? He's got his instruments. If you're not familiar with it, it could look like hieroglyphics. It could look anxious. But to him, he trusts those instruments, right? So if his altimeter says he's at, 5,000 feet, he trusts that he is in fact at 5,000 feet. But if you're flying the plane and you're in fog and you're in haze and you'd be like, I don't know, maybe I'm at 100 feet. I'm going to hit the ground. I mean, you'd be nervous, right? I don't even want to think about it, right? Because I would be very upset. I'd be very uncomfortable. And the mind would start to play, games, right? And the mind will do that, right? Ask JFK Jr. He's just not here to answer that question, right? What a horror show that had to be. God almighty, that had to be a horror show, right? He took off that plane and he went out off of Boston, out on that little island. In the summertime, this time of year, they get later in the summer, they'll get a haze. And he couldn't tell up from down. And oh, Jesus Christ, you know? And then the people on the plane probably got scared too, so um, you have to practice that, right? We can only make you aware, right? And that's what we're doing here. We're just making you aware that there are these tools to manage your trading. And it's a beautiful thing. It really is. And if you want to, you want us to plug anything in, we certainly can, right? And now there are times when the market will get, really jostled, right? So we're starting to see, you're seeing it right now. You're seeing the Russell starting to get a little bit of selling. Don't be surprised that the others follow. Don't be surprised. Please don't short, right? Don't try to take trades off of this, right? Don't, if you're doing that, I think you're kidding yourselves, whether you're doing it with us or with someone else. I think you're wasting your time. We're doing this to show you what's possible so that if you want to get serious with your trading and get away from that, the reality of it is, and once you have these tools and you get home, you're not going to need to subscribe to anything, IBD or CNBC or service. We will continue to build systems for you though. And if you have your own ideas, we're prepared to try to write them for you too. So we're all about also too our members that stay with us for years. We try to lower the cost and increase the value. So that's what we're constantly trying to do, and it works because they're going to become more and more self-reliant on the tools. They'll be teaching us, hey Don, I'm doing this now. I did take that trade off, and in hindsight, that turns out not to have been the right move, right? But we had $1,000 draw right here, right? We did, and I wanted to get it knocked down. So it turns out but I did have that draw, and I didn't want to miss the opportunity to get myself back to par. So I have to wait and be patient and And maybe later today the market turns down and we get another trade-off. But if it doesn't, it doesn't. And tomorrow's another day. We're still very positive for the week. We're still in good shape. But that's what I chose to do. If we hadn't had the draw, then yeah, I would have been more patient. That would have been the way I would have played it. But maybe you'd play it differently, and that's okay. You will play it differently. You will. Now we have up here all four markets. I wouldn't suggest to any of our members that they have all four every day. I would just have 2 to 3 of the four at most. I'd probably lose the Dow. You want to have at least five markets, and no more than seven. And you want to, if you're trading intraday, and that's what you want to have. And ideally, you want markets that maybe offset each other. Um, and But I wouldn't come in. Now we're doing it here and we're demonstrating, and um, that we jump on the NQ quite a bit, but um, and we keep all four up because our members, they like the indices. But Susan has coffee, soybean meal, you know, we have other accounts. So, but we were talking about oil yesterday. We punched this up on a daily. We said she was in panic sell, and CNBC was even talking about yesterday. Oh, it's the end of the oil market. It's a recession. Oil's going to 50 or 30. Just nonsense. Those guys. Just God. Just turn them off, please. Just do yourself a favor. Turn them off. Watch something else. Don't. God. Just awful. And but we were saying this, that you want to start taking trades to the long side. I got to grab this. Sorry about that. Ted, Ted has a job. Ted is a 3-year-old golden, and his job is to get the mail every day. He's a letter carrier, not packages. No, no, he will do magazines if there are magazines in the mail, but not packages. He's not an Amazon delivery guy, no, or an Uber. But he does like he could work for the post office. He's a letter carrier. Loves it. Loves carrying in the mail. Everybody's got a job. Everybody got a job to do. So we look at things. Where are we? $1,000, 2,300, 3,300, 4,300, $5,000, 6,500, nearly 10 grand. Can you get in here and get a portion of that? I don't know. I don't know if you can or not. I don't know. We can, and we do. I'm not going to get it all. I'm not. And I may not do it every day. I may not, but I get enough. I can get a decent profit factor. That's all I'm trying to do. Not trying to get it all in one day. I'm not trying to get it all in one trade. Just trying to get my share. And I'm trying to stay in the moment. I'm not trying to extrapolate out, and I'm not thinking about what I'm going to do with the money. I'm not. You don't do that with your job. You just do your job and then you do what you do with your money. But I don't think maybe you do, but I never did. I just did it when I had a job, when I worked for someone else. I did what I did, which was far from this, as far from this as you could get. But I didn't think about the money, right? I was helping surgeons do surgery, and I was just purely focused on that. As well compensated for it, but but I didn't think about it. You don't want. It's difficult here because it's right in your face. It's right in our face, and what am I? I'm trying to tell everybody, get off of it. Get it out of your head. And don't do something just for the money. That probably isn't going to work out well. If you're doing something just for the money, just isn't going to work. I don't care what that is. I just, especially this though, it's got to be something you want to do. Happy to answer any other question. The robot is still on, but there's been no trade, right? In a little bit, I'm going to go have a launch, and maybe the market turns down, and if it does, and the robot goes off, and then we'll be in the trade, and we'll see what we do. If it doesn't, it doesn't. Now, again, this is just one tool. It's not, this does not use moving averages. If we were using moving averages, it would not be this smooth. It would be a mess. And they'd be very lagging. But, how is it day after day? The market's 1045, 1040, 10. This is 5-minute difference. This is, 10-minute difference, 10-minute, all within 10 minutes, 500 stocks, hundreds anyways, 30 and 2000. How does it do that? How do thousands and thousands of stocks in these indices, how do they move? It does it because the hedge funds are here. This is where they are. They're trading thousands of these things, thousands of contracts and options contracts, and they're leveraged to the hilt. Now, I'm not suggesting anybody do that. We don't have to do that. It's a huge advantage, but they do. If they want those homes in the Hamptons and build those big buildings, that's what they got to do. And they will pay you 4 or 5%, or the mailman, or the rank and file. They give them a little bit.
Just give them a little taste. And they'll tell them a little story. Yeah, you're going to be in the market, the lifetime, because, you average 8 and 9% a year, and you're going to compound, and you're going to be retiring. Of course, they don't tell you, your portfolio may get cut in half at any time. Anytime, God forbid, those planes hit the building again and the market's closed for 5 or 6 days and they open up, they can do something called limit down. Everyone thinks, a stop. We're here, right now. We're not on, and we stay very controlled. But markets can do something called the limit. We don't talk about it much. Limit down. What's that, Bagger? Well, let's say, God forbid, the market's closed today and something happens tonight on an international scene. Let's say China opens up. They go after Taiwan and they shoot down one of our planes, God forbid, or a boat, ship. And the markets gap down in the morning, 5 or 10%. There's a certain percentage. They will close. If it gaps down to a certain extent, they will execute just a couple of trades and then they will close. And they may try to reopen they got breaks within a certain period of time. And if it does it again, they'll shut down. And then they'll try again the next day and the next day and the next day. Now, this can happen in the commodity space quite a bit. It happens up or down, limit up or limit down. So anyone who's in ETFs and everything else, they think, I got to stop on and I can't get hit by 50%. Oh, yes, you can. Oh, yes, you can. The market is not obligated to open. It can close for 3, 4, 5 days, and it can close for longer than that. And it can close and you'll get out wherever it is. An individual stock can do that too. I had it happen to me. Boston Scientific, years ago, she's trading at $42 a share. I think it was $42.50. I bought 1,000 shares, 42 grand. I just wanted to be in it for like an hour or two. That was it. I had no intention of being in it that long. It was a reckless trade. 10 minutes, 15 minutes after I'm in, the thing stops trading. I'm like, what in the world? What happened? What's that? What happened? What do you mean? Stop trading? It got a halt. What? I halted it. Okay, well, it'll open up later and then I'll get out. No, it halted for the rest of the day. What? Why? Oh, because the CEO said he had news that was going to materially impact the stock and he halted the trading. I did not know he could do that. Yeah, he could. Well, shit, it'll open tomorrow. No, it didn't. And it didn't open the next day. And it didn't open the next day. Nope. You can check, you can Google it. Nobody cared. I'm calling CNBC. What is going on? I was calling the company. What the hell's going on? Open the damn stock. It was closed, halted for 3 weeks. I shit you not. 3 weeks, 45 grand, 40 something $1,000. And of course, all the speculation wasn't good. It wasn't that they were going to get bought. No, that. It wasn't going to, it wasn't going to open up 80. It wasn't any chance of that happening. No, it was all speculative on the bad side. And it was bad. When that son of a bitch opened in 3 weeks, I sold it immediately for about 5 points, 5 or 6, 7 points lower than where I get in. I was pissed. I never bought or sold Boston Scientific again, and I never will. But I also learned a lesson, and I just shared that lesson with you. They all can do that. And the market can do that too. And nobody knows. And I can't happen. Yeah, okay, sure. Oh, yes, it can. After 9/11, the markets were closed for 5 days. Nobody knew for sure where they were going to open. They were just trying to get them open. So it can happen. So a stop loss, especially when the markets close, is not an automatic. Anytime the market closes, there's risk. There's weekend risk. There's overnight risk. In the futures market, I have seen the markets close. They close at 4:15. They open at 4:30 for about a half an hour for them to take a leak and make adjustments. The public is gone, and then they close between 5 and 6. I have seen the S&P open at 6 and gap down 50 handles. I have seen the Dow at the same time gap down 500 in an hour. Based on what? Just we're just dumping. And if you are over leveraged, undercapitalized, same side of the same coin, you're going to take it in the shorts, one way or the other. It can happen on both sides of the ball. So, any case, we do spend a lot of time in our on the Q School videos and during the Q School explaining in detail the mistakes that we've made and the hazards that are there. I'm very, very respectful of these markets. And I'm also very, very respectful that they can do things and they will do things that we have never seen before. And they will. And I've said this before, and I've said it for years. And for instance, there was a time not too long ago, like in the last year or two, that oil opened at $20, went from 20 to 15 to 10, and then went negative. I did not know a futures contract could go negative, meaning you had to pay them to get the hell out. And it was when they ran into storage issues in and around COVID, and that's a whole nother story. But swing machine, you never would have been in there trying to buy it. You would have seen, and we saw it happening real time. So there are these things that, and if you're in here enough and you're doing it enough and you're around the markets and you're not aware of what you need to be aware of, you will get hit. Trust me. I feel like I've been hit by every branch. And I'm still very, very respectful. What can go wrong will go wrong. So we use technology in a big way and very respectful. Could we use more leverage? Could we do more things? Yes. Are we going to? No, because I don't have to, and I'm not going to abuse it. We get a very mature perspective about this. So in any case, I digress a little bit as they continue to run it. And it's painful. I can tell you, I can go to the trade. Now, we took that trade off. We intervened on the strategy. Do you remember? And I took it to knock it down. That strategy, it's still long. And I know what you want to know. How much is it up? Rub it in. You want to know? It's up $2,525. Nah, Does it hurt? Hey, I don't like it, but I'm not going to cry about it. It's sure enough. And I described it at the time. But the good news is my account is I'm whole. I'm whole and I'm fine for the week, right? But sure enough, right in full view of you guys, right? So what kind of a trader is he? What a dumbass. Hopefully, maybe some of you, I don't know, maybe you're watching and we got others that are trading swing machine. And we do have folks that trade just swing machine. I've got to go grab a bite to eat. I'm going to let you watch, right? We're doing a lot more of the YouTube live just since we got the new website, and we've been offline for a couple of weeks on the website. So that's why we're not doing YouTube to, we're not Paige Sparanak. We're not trying to be, an influencer or something and have 500,000 followers. We're not. We're just sharing what we do for the folks that are serious about wanting to learn how to trade mechanically, robotically, and and give you a chance, a place to ask some questions and to see it real time. And you see the good, you see the bad, you see the ugly, because I can't, foretell the future when we do this. I can say, if you watched on today's Thursday, if you watched on Tuesday, you saw what we did on Tuesday, you saw what we did yesterday. Could have done things a little bit better yesterday too. We finished down for the day about $100, but Monday or Tuesday was positive about 2,700, and I still think we got plenty of time for the market to give us another shot. But I'm not going to get in here and guess at it because there's no reason to be short this market, and the strategy isn't. It's still won't. So we'll be back. Enjoy. If you got any questions, let us know. If you want us to punch anything into Swing Machine, I can do that too. I should be back in about 30 minutes or so to answer any questions. Have fun. Be careful. I hope it's helpful. Again, we've been doing this a long time. Okay, everyone. You can see the market starting to come in a little bit. I'm not suggesting anybody do anything here, but we're still here, and Swing Machine has done its thing, and the strategy is still running, but it stayed in that long, and unfortunately, we took it off to get ourselves back to par, and of course that had to be the one that ran and ran, but that's fine. It will, if the market does turn down, and on the NQ, that strategy, that trading robot that we're calling the trend seeker will take the trade. And for this week, we're still up and over 2 grand and running a profit factor of about 2, so we're fine, not trading a whole lot, and Swing Machine is doing its thing. We did get an inquiry about whether or not Swing Machine can be automated, and yes, it can, in any number of ways, and it can also, you can set alerts from Swing Machine so that it can be running and sending you alerts to your cell phone. Swing Machine Plus is just one of about 70 individual proprietary programs that we run. We run radars and indicators and trading robots and things of that sort, doing everything we can to be able to trade and to keep our emotions and our head out of the game. If you have any questions, let us know. We're going to leave it up here as we're kind of celebrating the new website. We were offline for a week or so because of the hosting company. If you have any questions, let us know. It's still a work in progress. For members, I will share this, is that our goal is we're gonna build a parallel site, still Stock Market Caddy. It'll have a special name. It'll be for members. It'll be totally private, and we're going to put the nightly videos there. But all important, we're also going to put a lot of other information there, and that'll be readily available, so that we're not in a position where we've got to be sending emails or spamming it. We don't want to spam anybody in sending emails. So we'll have a place, a repository where we can place some of the things that we're working on, some of the things that we're seeing, and members will be able to go to this private site and see what they want to see on virtually a daily basis. We don't want to put, the more we got into this, we don't want to try to do too much with the primary website, because if we do that, we slow it down, and it becomes a little bit unwieldy, a little bit cumbersome, and so we don't want to do that. So that's the idea. So we just thought, we'll just build a second one. That's the plan, anyways. So I hope that'll probably roll out. It's June 1. Our goal is to have um, that private site for members built and operating by the June 30th. That's the goal. We'll see. We'll see how we do. And there will be, for members too, there'll be a link between the two, right? So all you'll have to do is you'll be able to push one button and go to any site you want to go to, and you'll have, everything, once you sign into the private site, you can go any place you want to go. So that's the goal. So we can see, had we stayed with, we came out of the trade because we wanted to get back to par because we took that first trade down. But we can see, let me tell you that, that trade had a high watermark of close to $3,000. So we would have been up, around terms, we took out about 800 to get ourselves there. Yeah, it would have been up about 2 grand. But that's okay. We're not going to get them all. We're not going to get the very top. We're not going to get the very bottom. We're just trying to get the middle. We're just trying to get, our portion. That's all. We're trying to control our risk. We're trying to mitigate our risk, keep the account volatility relatively calm, and we'll see if we can get off another trade here. It will come in. I'm not going to force it though. I'm going to let the machine do it. The market certainly does look, even here on radar, it looks a little tired, but we'll have to wait and see. If you're looking for some opportunities, let's bring into view for you. Let me lose those markings here. I'm going to lose those markings so you can see this. This is a tool that we call the SMC Options Defined Risk Club Selector. It's an option club selector. So let me see if I can widen this out here for you. We'll put it over there. Let's see here. This isn't. Okay, no, we got it right. All right. So this is it here. SMC Defined Risk. It's a club selector. So if you're looking for option opportunities, these stocks here, it's telling us that you might want to consider some call options here. You might want to put them through. These stocks right here is giving you some call debit spreads. It's telling you that you might want to do those. Now, what strike, how far out? I'd go 30 to 40 days, 30 to 45 days. But what strike would be up to you, and the ranges. You have to have some knowledge of what to do there. We cover that in detail in the Q school. On this side of the ball, if you're interested in on the dark side, Electronic Arts is suggesting a call credit spread. This is Amex, and it's suggesting a flat out a put. Here's another put on Dollar Tree. Here's another put on Synopsys. And that's about it there. If you're interested in some iron condors, which is a neutral strategy, we'll scroll down and show you. So all these stocks here suggesting iron condors. They show up on both the left and the right because doing an iron condor is a neutral strategy. So these are the stocks that the tool is telling us that we might be interested in. So we'll show them to you. Again, this is how we go about. So we're not scanning the internet. We're not scanning CNBC. We're not, just getting a bunch of stocks from Dan Nathan and Guy Adami and that tribe, or any tribe. We're doing it from our tools. Makes sense. And we also can, if you want to be trading stocks, now this is going to be pretty wild to you. This is another tool that we call the Pebble Beach trigger radar. And so we'll put this in here. Here they are. So here are the stocks here. And this is automatically sorting. So let me just show you. So there aren't 34 trades today. There are 33 because there's a label row. So the purse is calculated on a $10,000 investment or trade today. Now you could have used options, but that's what we calculate the purse on. So we can discern that a line triggered today. It went long at 283.33. The stop was 273. And if you had taken that with $10,000, you're up $400, which is a 4% return. And there it is. And that's a good looking move and probably going to go higher. Here is a Schlumberger, similar type move. Let me see if I can get that. Reset the scale. Oh, it's I got to bring it up. It's blocked. There it is. That's a really nice move. So here's some others. Goldman Sachs has generated a sell, and that was today, and it's up 3%. I'm trying to bring the chart up for you. There it is. Good little move. So out of 33 signals, it is profitable in all but 1, 2, 3, 5, 6, 7. So it's profitable out of 20, 25, 26 of them. So thereabouts. Long and short. It's a fantastic tool. It reads. It's a very. We were using this in advance of Swing Machine, and it tells you where you are in the field, and it reads candle formations, the most probable ones. It's really, really good. Really good. So if you want to get in there and trade some stocks using options, that's a great way to go. And we call that the SMC for Stock Market Caddy, Pebble Beach Trade Triggers. And this market continues to run, and we're not in it right now, and that's fine. We're not. But the 1045. Let's just denote this again. We'll just do it here. We come in, and here is the market, or the VIX, and we commented at this at 9:15. You guys were on thereabouts. It turned down at 9:15. That was a warning to anyone who was short this market that they're probably going to give it a run, and a run they have. At 10:45, we go long at 42.02. Swing Machine does 12.62. The NQ long at 10:40, 5 minutes earlier, $3,000. 10:50. Oh, in the span of 10 minutes, 1,100. 10:40, 600. So 1,200, let's call that 3,200, 4,300, $5,000. Then, of course, gold has been long all morning. It's 840, and then oil is up a couple grand. Your job as a trader is to get not all of it, but just a portion. Do you have the patience? Do you have the discipline? Do you have the skill set? Do you have the time? Do you have the commitment? Do you have the ability to sit on your hands and not be in the market? Right? Now, that's all very, very hard to do individually. That's called, discretionary. But when we're using machinery, pretty easy, I mean, I went and had lunch. I'm not going to get short this market until this guy goes short. I'm just not. I don't, I'm not going to do it with a stochastic. God knows, the MACD or that nonsense, right? If that shit worked, everybody would do it successfully. It doesn't work. Just doesn't. We can write programs on the stochastics and on the MACD. They don't work. So can't get the computer to do it. You're not going to be able to do it. I'm not going to be able to do it. If anybody has any questions, just let us know. We're here. We're just going to wait and let the market do its thing. And this isn't a, we're not showing this so that, that we have 100,000 people in here, buying and selling. That's not what we're about. We're not doing that at all. We're just doing this to make us, or yeah, make us aware, make folks that are interested aware, right? But we're not trying to create some sort of chat room so that, people can super chat or do that nonsense either, right? It's just a place where you can ask some questions and you get a glimpse. We're not going to do this every day. We're probably going to do it every day this week, but we won't be doing it every day. It's not our plan. And but it's your chance to ask questions. And it isn't trading isn't, we'll be the first ones to say it isn't for everybody. It isn't. And in fact, I'd probably go so far to say that most people probably shouldn't do it. And but if you are going to do it, I think that you want to get the best education you can, be made aware of what the advantages are. There's a number of advantages. I can certainly highlight those, but there's some other disadvantages too. There's not many professions in life where if you make a wrong decision or you do something wrong, that you're going to get punched in the nose and someone's going to take money out of your pocket. I mean, even golf, they don't even do that anymore, right? It used to be that you had to pony up so much money and try to qualify each and every week, and if you didn't, you were out. But they don't even do that anymore. But if you got a job, whatever your job is, and you make a mistake or whatever, your employer doesn't reach in your pocket and take $500 out. The market will do that. Yeah, we'll do that. You make a mistake or you don't, so you have to be, some of the other intangibles, and you have to be comfortable with some uncertainty in life, right? And that's a difficult state. Most people don't want that either. Most people want certainty. They want to get up at a certain time. They want to go to bed at a certain time. They want to do everything at a certain time. And, everything's got to be just right. That isn't going to be the market. Market's going to move when the market wants to move. Could be at night, could be in the morning, could be in the afternoon, could be 5 minutes from now. It's going to do what it wants to do when it wants to do it. Do you have the skill set to capture those moments in time? We talk about this all the time. If you were to compare the markets to the solar system, let's just say the astronomy, the stars, right? In years ago, decades ago, I wasn't a sailor, but I read about them. They had something called a sextant. They would take the sextant and they would position themselves where the boat was, and they would position the sextant against the horizon, I understand, and then point it to a fixed star, and they would triangulate and they would map themselves out where they wanted to go. And that's how they mapped where they wanted to go. They could triangulate 3 or more points, fixed points: the boat, the horizon, the star. You cannot triangulate the market. The market is not the solar system. They're not in the same position from day to day, from moment to moment. They're not. So if you're trying to triangulate, you bought into something, or you bought something, or you got your moving averages, you're not going to get it done that way. It can't, you cannot triangulate. Well, then what the hell are you doing, bagger? I'll answer that question. The market isn't the solar system. The market is more like the surface of the ocean. What do you mean? It's like waves. So I like to watch that show, and we're getting a little bit of it now, right? We're getting a little bit of a little wind coming out of it's cornering, right? It's coming out of the south. We're coming from the north, right? You can see it on the radar. You're a little delayed. We're seeing it real time. I like to watch that show where they cap the shrimp, not the shrimp, the crab guys. was that deadliest catch, right? Well, those boats aren't necessarily, going, they're not sailing, across the Bering Sea. They're fishing. But he's got a skipper, a captain that boat in such a position against the waves or with the waves. I'm not a boat captain, but that's what he's doing, right? So the waves are going this way, they're going that way, and every once in a while they crash over the deck of the boat. The market is like the surface of the ocean. And some days it's really calm, some days it's really choppy, some days it's choppy and calm, and some days it's just flat out choppy. It's all over the damn map. We're sitting here with Swing Machine, which is like our cockpit. It's like our dashboard, and we're kind of like driving the boat. That's all. And our job is to come in here and get these crab pots on the deck and get them in the belly of the boat. Whatever you got to do, we got to get some of them in the boat. And then we can, park it. That's what we're doing. So whatever, I don't I don't know of any other way to describe it. No, we talk about it in golf terms because it's fun. We talk about it in all kinds of different terms. But if you have some expectation out there, I'm just talking to the people that are in YouTube. You may have heard this, maybe other people that pass through later, and I want them to understand. If you are out searching the internet, you think that you think there exists a program, one program that you're going to run, and it automatically is going to print you money every single day. And it's never going to have a dry down. It's never going to have a loss, and you're not going to have to do anything. And it's just going to deposit money in your account. You're looking for something that doesn't exist. And wherever you go, whatever you decide to do, you will be disappointed because you're trying to get something that doesn't exist. You are not going to get onto that boat, at least not with me, and skipper that boat across the Bering Sea and collect yourself a bunch of crab, millions of dollars worth of crab, without any experience, without any practice, it's not going to happen. It just isn't. And if you think you can come into the deepest, biggest financial markets in the world, these S&P futures are being traded by the biggest, smartest hedge funds in Chicago, in New York, Singapore, and some guy is sitting on the back of his yacht. He's probably 75 years old. He's probably, parked off of Monte Carlo. He's got 2 or 3 25-year-old girlfriends and thongs swimming off the back. And he's sitting there buying and selling futures contracts. If you think you're going to just pop in with your micro contract and compete with him day in and day out, with no practice, with no skill set, with no tools, I don't think so. Good luck. But not going to happen. Not going to happen. You can buy and sell and buy, but until you get a profit factor moving, you're not going to get it, right? So I'm not here to dissuade anybody at all. Meant to inspire you, but invite you to think about what it is you're doing and how you're going about it and what you're going to do. But I must get 5 or 10 emails a day. I get a lot. And it'll be, hey, bagger, how much is that bot? I swear, it's amazing to me. I don't even answer it because they can't be listening to anything that I've ever said, and they can't have visited the website. It doesn't show me too, by the way, we put a lot of information into the website. When somebody, ask me a question, whether it be an email or in a phone call, with information that's readily available in the website, it also sends me, I don't mind doing it, I'll answer the question, but it also sends me the signal like this person really doesn't have, I mean, you need to be able to, these robots that, we're going to provide our members, you're going to need to get in there. And you're going to have to back test them and forward test them a little bit, and you're going to have to tweak them. You're going to have to run them. You're going to have a job to do, and I can't do it for you. Right? We can teach you how we go about doing it, but you're the one who's going to have to execute it, right? And that could be why we don't have. Simon was here earlier and asked us, how come we don't have 1,000 people listening here? Because maybe they know, maybe they don't know, maybe they don't care. Most of the young people today, I hate to be pejorative here, but they know everything. So they don't no one's going to teach them anything. They already know. They got one of these $200,000 educational degrees, in social justice or something, and so they're not, you're not going to teach them nothing, and that's just fine. They can work the rest of their lives and try to pay that off. We need them in the market, so let them buy the ETFs or their cryptos. Nothing against crypto either, by the way, but reckless to have bought crypto and not known how to hedge it using futures contracts. That was ridiculous. And Swing Machine can trade crypto. Absolutely can. So we wait. It's about 1:30. If you have any questions, let us know. I'm not going to ramble on. But for those people, that want to, and can you trade stock? Yes, but we want to. Our trading capital is our inventory, right? So if you're running a business of some kind and you're manufacturing something, you only have working capital, and you have to buy inventory, and you have to manufacture it into a finished goods, and you have to get it sold, and you have to do it over and over again, and you've got to run that little business like a business. You just can't have too much inventory. You can't chew up your capital all in inventory, and you can't run shortages, and so our inventory is our capital, is our trading capital. I don't want to go out and if I buy 100 shares of Nvidia, trading at $400, that's $40,000. So if I use $40,000, maybe I put a trade on Nvidia and I make $400. Okay, but I use 40,000. Oh, and then I got to be concerned with wash sale rules and um, you know, all of that. Whereas if I use a contract, a leverage margin contract, this contract, when this NQ goes off, I'm using in marginable capital between the hours of 9 and 4. I'm using about I think it's about $1,900, $1,800, somewhere around there, $1,700, $1,800. If we realize a $400, in that example, if we realize a $400 profit, I mean, you can do the math from there, right? But of course, we're using profit factor, but so we want to be efficient with the use of capital. We want to be efficient with our time, um, you know, like any other business, right? But most people that enter into the trading game or enter into trading, they don't think of it as a business. It's a bit of a lark. Davey day trader. Where is he? He's out, rating pizzas every day. He had enough, right? Oh, remember he used to come on with the big green hammer, buy stock, buying stock, buying stock. I'm up 1 million. Yeah, how long did he last? Yeah, 5 or 6 months. That's about it. He's gone, gone, gone. Got an ass whooping, and and everyone that went with him, and did all that. That's another generation, another group. And so most people, the brokerages, I'm not going to say anything good or bad, but anybody who can fog a mirror, anybody who's got any money can open it and do it. And you can push buttons and buy and sell. But get a see, do you even know what the profit factor is, and can you get a profit factor going, week in, week out? I don't know. Now, I will say this is that during the Q school, we will set you up and you will know at the end of the Q school, we'll have you tracking your profit factor and you will know, and we will know, where you are, come the end of your 3 weeks, you'll have answered that question because we will have you keeping score right, right in the beginning and all the way through because only you can answer that. I can't answer it. I don't know. We did have one person. Well, I won't go there, but you know, um, let's just put it this way: by his own admission, he had a little discipline problem. You know, he liked risk, he liked it a little too much, and he didn't. You know, he came to us in tears, and he had done something quite reckless, quite leveraged, and so we talked him through. I was really a little reticent. I said, well, we're going to find out, but you need to, throttle back and wait, and you can get your money back. It didn't have a good outcome, but you're going to have to take your time. And he didn't want to take his time again. He wanted to do it all tomorrow, today. And if you have that gene, and you'll know if you do, and if you have that gene, this probably is not a good environment. If you have that gene that you can't, push away, put that mouse down, keep that, we haven't had a trade on, right? I've been here, we've been live with you. Haven't you? Like, what the hell? Why doesn't he have a trade on? Well, I'm joking, right? I hope. But others might. They might come through. Why does he even have a trade on? What kind of what? I can waste my time watching that. We'll get it, we'll get a trade on when the machine gets a trade on, whatever that might be. See, because we're going to be here, we want to be here at the end of the week. Ideally, I know we'll be trading. Well, actually, tomorrow's. So we really want to wrap up. I don't like to trade on Fridays. So I had to think about what day it is. And we want to be here next week, and the week after that, and the week after that, in September and October. And, the market, that's why it doesn't matter to us where the S&P goes to. They go to 4,800, 5,000, 3,000, 2,000, 6,000, 10,000. Who the hell gives a shit? Who cares? Now if you're, 30 years old and, you're working and you got 3 kids and you want to, get into dollar cost averaging and, some stock pimp in downtown Tampa or Orlando or Atlanta or Baltimore or wherever you be has told you, over the last 100 years, you get your money in the market. Well, then, yeah, you're going to hope and pray that the market goes to, 20,000. The market goes to 20,000, you're probably going to have inflation running at, 10% again. And so it doesn't, whatever gains you get is going to just be chewed up. Mhm. But, but that's the game. That's what they do. And we're not the first ones here. We're not going to be the last ones here. There are bull markets and bear markets within all these markets. Everything, has more or less happened before. But if you think today that these markets are the same, just think about what's going on with AI, right? And we have programs that will make adjustments on what we call on the fly or AI. They will make adjustments as they go. And and in large part, I mean, we may be in this realm. I mean, we could spend from 1967. It was a 16-year period. I think it was from 1966 to 1972 or something like that, 73. 16-year period. The S&P didn't go anywhere. It stayed in the same. It ended in the early 1970s where it began in 1966. Stayed in that same thing. The only people who made money were the traders. But if you had bought and you got another 20 years to go, you didn't make anything. Nothing. Your dividends, and if you're going to do the dividend thing, you better not lose principal, right? It does you no good to get a 2 or 3% dividend when you lose, 30, 40% of the principal. How many years does it take you to get that back? It does you no good to get a 2 or 3% dividend when you can get 5 and 6%, which you're just about getting it now on 90-day paper, you know? So that's also a headwind against this market. Do you know how interest rates impact bonds? Do you know how bonds impact stocks? Let me start with that. Bonds up, stock this. Yeah, some people think that. Not so fast on that. What is the relationship between bonds and interest rates? Interest rates up, what happens to bonds? Interest rates down, what happens to bonds? What happens to bonds? What happens to markets? Do you think the 100,000 people that are going to fill one of these football stadiums in the fall, do you think there's anybody in there that could probably answer that question? There's probably a few, but not too many. No. Ask them, what the value of a dollar is. What? Ask anybody. What's the value of a dollar? Ask your neighbor. Ask somebody wherever. Watch their brains freeze over. I don't know what the hell you're talking about. Mm. Yet they're making buy and sell decisions in the market and you're following along with them. You're putting your money in with them because they all think that Nvidia is a great buy or that the Nasdaq's going up. And you're putting your hard-earned, your life savings in there with them. Not me. Not a chance in hell. No thanks. But it's going up. All right, yeah. We'll get in and we'll get out. We'll get in and get out. And when it's going down, it's going down. And we'll be here in June, and we'll be here in August, and we'll be here. Trust me, I have a beautiful life, beautiful wife, great life. I don't have to travel, right? I don't have a boss. I don't have any paperwork to speak of. I'm doing exactly what I want to do. I like to play some golf. I like to do some fly fishing. I like to walk our dog. I like to do a little bit of travel, but not much anymore. We used to do a lot of that. And, we're content to, kind of be nearby, doing exactly what we want to do. It's great. We can do this from wherever we want to do it. Right now I'm in Tampa, Florida, but I could be any place. I can take it with me and, you know, great way to go. Great way to go. We were just asked in a moment ago, we're getting some emails. We thank you about TradeStation. You do not need TradeStation to be a monthly member. A monthly member will get you a video view of all of our algos every night. You'll also get a hall pass. I meant to put that on the website and I didn't, but you'll get a hall pass to be with us for a day. So you get to see what we're doing and we take you a little bit further into the behind the curtain, if you will. If you go through the Q school, you don't have to have TradeStation, but if you do, it's a bonus for you and for us. It really is. So you'd want to think of that through. But the other big part, though, is if you go through the Q school and it's your intent to become an annual member, then you most definitely need and must have TradeStation, because our programs, which presumably you want as an annual member, otherwise why be an annual member, they will only work on TradeStation. So if you're in another part of the world, we've gotten questions from the UK, Senegal, you need to find out
what is available to you in terms of TradeStation. And we don't have any affiliation with them. We're just a happy customer. We couldn't do what we do without their platform. They're very good support, wonderful. But I don't know from what I understand, they're international. They're owned by Mitsubishi Bank. They're an international concern, billion-dollar company. But I don't know what is available or not available in other parts of the world. We do have members now in Hungary. We do have members. These are annual members in Germany. So I don't know exactly how or why they get, but they have what we have. So
The nice thing about swing machine is not only it can help you get in, it can help you stay in, and it can also help you stay out too, right? So there's very, very helpful. Now, we are not surprised with this today. It is June 1st, the first of the month, and the 401k money comes rolling into the market. So not unusual at all. Let's just give you a view here. These are the recap here. The 5-minute VIX turned down at 9:15. We verbally called this out that anybody short the market better be prepared for a reversal. At 10:45, the swing machine goes long at 42.02. That trades up 1,400. At 10:40, 5 minutes before, the NQ goes long at this price, and that's up 3,500. The Russell goes long at 10:50. That's up 1,000. The Russell goes long at 10:40. So within 5 or 10 minutes of each other, all four markets go long. 1,400, well, 45. Can we call that 5 grand, 6 grand? You know, this is $6,000 or $7,000 available in a pool. Did you get yours? 1,000 in gold, and oil just turned back down the other way. It was up about 2 grand on the long side. Now, what's going to happen here? Let's just take a look. Here is the daily. The daily S&P is at 70. Can it go higher? It absolutely can. It can. Let's take a look at the VIX. The VIX on a daily is at 20. Can the VIX go lower? It can. It absolutely can. It can go lower, and the market could go higher. However, the probabilities are now at a place in time that we're probably at about over the next 20 days, not probably, the probability is at about 66% of the time, this market is going to pull back to at least 4164 over the next 20 days, if not sooner. If we push into euphoria, that percentage will go up to 95%. So, and we're also picking up on, if the market was totally in proportion to the VIX, we should be at 80, and we're not. We're not. We may have been there a moment ago, but we're not. So we think that right here, right now, the market, particularly the S&P and the NASDAQ, on a daily basis, is reaching the point of saturation, and we're preparing for a pullback, at least a pullback, not a market crash. You never know, but the probability is that we'll come back in. So if we owned shares of stock, we would be looking to sell covered calls. We would be looking to cash out some of that and raise cash levels. For aggressive trading, we will begin to put on bearish option trades, puts, call credit spreads, things of that sort. That's what we're gearing up to do, and we're doing. So we're going to put this back to a 5-minute though, because we're trading futures intraday. We trade options over the longer term. And this week, in celebration of our new website, not new, we're not new, but the website is relatively fresh, relatively. We've been creating some awareness and doing a live session or two. If you have any questions, let us know. You want us to plug in a market, we're happy to do that. You want to get questions about our other tools that you may be seeing about, and you want some examples real time, we'll do that real time. Get any other trading questions, we're happy to answer. Right now it's about 2:30, and we'll see if this sticks. Now the trading robot, the history here for this week, we're in the house with about 2 grand, a little over 2 grand, and a profit factor of 2. Very respectable. We missed a fat pitch yesterday. And this morning, the first one right out of the gate, we took $1,000 hit. And so we took off the next trade to get us back closer to par, which is where we've sat, because the market never gave us another trade. And it never fails, right? It's you could have guessed it. If we hadn't taken the trade off, we would have been up that single trade. Rather than just pocketing 800 and getting back to minus 200, we would have had a run up of $3,000, right? Am I going to beat myself up over that? No big deal. We're not going to get them all, right? I'm not going to get the high. I'm not going to get the low every single market, every single trade, every single day. That's for other people. But we're going to stay in the game. We're not going to, um, you know, get wild-eyed. And equally, if we had stayed in the trade, we could have given up some of that profit, could have gone, would have, right, gone the other way. But a little of that, right? We're human, but we'll wait, and we still have plenty of time. It's only 2:30. We'll let you watch. If the trade goes in, it is a machine putting it in, not me. Now I can choose, as we did here, we can choose to take it out, and we'll see if we can get if we get a turn down, the strategy will get it. I do think we might pull back here a little bit, but I'm not going to put a trade on that, right? We're going to trade the machine today. If you have any questions, let us know. If you're like this sort of thing and you like this approach, Swing Machine is over 10 years old. Susan and I have been doing this since the early 2000s. We're not from Wall Street. Nope. We come from other endeavors. Susan worked for the likes of IBM and Lotus Software. I taught surgeons how to do surgery, so we couldn't be any further from Wall Street. There is nobody more cynical on the street or on Wall Street than I am. And I will arm wrestle you for the right to say that I am the most ignorant person of anything and everything economic, right? Maybe not entirely true, but I will arm wrestle you for that right, because I want to be able to move left or right. I don't want to have a preconceived notion of what the market is going to do at any time. I really don't. It's not in my interest to do that. I'm not interested in being right or wrong. I'm just interested in executing golf shots, trying to get the ball as close to the hole as I can, get a respectable score, get to the clubhouse, have a toddy, and come back and do it another day. That's about it. If you like that approach, we can't make any claims. We don't make specific recommendations. We can't make any claims, but we do think that you won't look at the markets the same way. And we can say that we will save you a tremendous amount of time. We can, just in pointing out some of the pitfalls. And if you want to spend 3 weeks with us, it's a long time. We won't be with you every minute of the day, but we'll give you ample opportunity to ask all your questions. We'd like to be able to spend an hour with you each day in a private Zoom. And if you can't make it on a given day, we're flexible. We're not, we can catch up in an evening or on a weekend, but we want to make sure that you have ample opportunity to see the various tools. We control the view and ample opportunity to ask questions. That is the idea. So that at the end of that 3 weeks, you know what we're about, you know what the tools are about, and you know whether or not this approach is worth it to you. You'll be able to make a more informed and better decision. And we just believe that when you do whatever decision that is, whether to join our annual membership or not, that'll be the best decision for you and for us. Good luck, everybody. We'll be here. We'll see how it closes out.
Well, they're getting some of that 401k money, aren't they? Golly, what a run, right? Oh, it's a new bull market. Oh boy, it's gonna be bullish. Yeah, okay, whatever. Doesn't matter. If you remember the 1045 trade this morning, if you took it, 1700. 1040, 4 grand. 1050, 1200. 1040, 700. The gold is oscillated. It's now under 60, and same thing with oil. We didn't trade swing. Wish I had. And we traded the robot. We had a punch in the nose in the beginning. We took a second trade to knock us back to even. We thought we would play it cute. Turned out not to be the right call, because we would have had, if we stayed with it, we'd probably have about 3 or 4 grand. Well, we'd have 3 grand in our pocket, but not a problem. We're going to be here tomorrow. Going to be here the next day. Maybe not on YouTube, but we live to play another day. Always another trade, and provided you just don't want to have, um, and it happens. If you have a bad start, even on a round of golf, if you bogey the first hole or two, you may have to do some things to get yourself back to par and come back and play again tomorrow. Not going to beat myself up over it though. Hardly. If any of this resonates with you, don't hesitate to visit the website. Be sure to check it out. A lot of your questions can be answered there. If you still have questions, feel free to give us a call. And we have a limited number of annual licenses. We limit the annual licenses every year. Last year, we had to close the door until the beginning of this year and at the first part of November. Monthly memberships are unlimited. Q schools are on a first come, first serve basis, and we have no more than 3 people at any one time. We will work with you and around your schedule. If it is something you're thinking of doing, be sure to check on availability, and we get it scheduled, and probably best that we have a chat. All right, so leave that up to you, and wish everyone the best. We'll let the market close itself out. The strategy is still running. I'm going to let it run because if she does turn down later tonight, if it does, I'm not going to sit here and ponder and watch every tick. Hardly. The machine will get it. We'll probably let it do so. But never know. May just stay bullish right on through the end of the week. Good luck, everybody. Let us know if you have any questions. If you want us to plug anything in here at the very end of the day and want us to, ask us anything, you let us know.
Okay, so the markets are coming in here in 9 minutes. 9 minutes. If you took it and went aggressive, aggressive traders could have done that at 42.33. You're up 350. 9 minutes. 9 minutes ago, 6:30. 10 minutes ago, 260. 11 minutes, 170. And I'd only be trading the 1 minute here because it's the very end of the day. Our little strategy, though, we can take it overnight, and if we want to, and so we'll let it run. It has not triggered, and we'll stay with our discipline here. But you could see, I think those of you watching on YouTube could see the selling coming right into radar, very, very, very clear. If you were long, you would take and aha, and there's our trade. So we still got time. We still got time. That's the strategy going on. That's a beautiful thing. All right, so we'll keep an eye on it. We'll see where we are come 4:15. Now, if we take it overnight, we have to have the necessary margin to carry it overnight. It's different than what it is during the day. So that has to be a consideration. We're okay, but you would need to be aware of that. You can see it pays you to be patient and just wait for swing machine. If you wanted to be aggressive and say, hey, you know what, this thing's really, really extended and I'd like to fade it, just wait for the 1 minute, at least for that. So again, 11 minutes, 460 to $500, 11 minutes, $800, 12 minutes, 400, 13 minutes, 200. The other thing is these are mini contracts. If you used a micro, it's $50. Right? If you use 5 micros, it's 250. If you use 10 minis, which I'm not suggesting, it's thousands, right? It would be, if you use 10 of them, it's 10 grand in 12 minutes. And God knows they're trading hundreds of these things like potato chips. But you have to be, practice, you have to be honed, right? I'm not suggesting even if you had the money, it would be reckless to do it if you, don't have the hours behind you. Need the hours, need the flight hours. Now we could have a decision to make, right? You would have a decision to make. How do you want to do this? Do you want to just, finish with a modest profit for the day and, feel good about it and go do it again tomorrow? And we could do that, right? If we carry the trade over 4 o'clock, the margin requirement goes from about $1,900 to 19,000. Now, if you have the money in your account, it's no big deal. It's transparent, but it is. Again, you need to be aware of that. I'm inclined to see if we get our pop here, we get up about $1,200 or so. You know what? I think I'll just take it off, right? And it very well may pull in all night long and gap down and do what it's going to do tomorrow. But one never really knows. But if we can get up 1,200, we clean up that little loss. We get a chance to put $1,000 in our pocket. And again, there are 20 trading days, 24, 20 to 24 trading days in a month. We're already up for the week 2,700. If we could get a point out of this, that put us up about 3,700 thereabouts, and that would be just fine. And we're probably going to take tomorrow off. So if you have any questions, feel free to fire away. We're going to be here until probably about 4 o'clock or so, and then we'll have to turn YouTube down. Again, we're not going to be doing YouTube all day, every day. We can't do that. We don't have the resources to do that, and we're not trying to, get thousands into a live view or anything of the sort. We're just here to try to answer some questions and give you a glimpse of what it looks like, what it feels like, and that's what we were trying to do. So hopefully to that end we did. Thanks.
You're welcome, Tina. Have a great day.
So it looks like we might try to get out of here with bragging rights and at least maybe post something positive. We won't. We'll try not to take it over so that we don't use that much margin. Let's see what we can do here. Let's see if we can get out of here by 4:15 with a little bit of profit in here. We're looking at our weekly performance. We got a weekly performance of over profit factor of over 2. So, we don't want to stumble here into the end of the week. We'll be around tomorrow. I'm not sure what we're going to do tonight. What we might do tomorrow is give a live view of some of the stock picking tools that we have as opposed to the futures and give you a view. So make sure you're following on YouTube, push the notification button, and we'll explain to you what it's doing. You get a feel for that and see if we can pick off. Now, we don't trade the stocks and the options as aggressively and as well, aggressive may not be the right word, but as quickly as we do with futures. But we'll still see if we can maybe pick off a trade or two. And we do think that this is a bull trap. We most certainly do. We expected that on June 1, the 1st of June here, that we would get a market pop as the 401k money come in. You might be seeing a bit of an exhaustion gap on this today. We would expect the market to come in now. Does it come in tomorrow? But I think the first part of next week, I think you're going to see a real comeuppance on the S&P, on the NASDAQ. Write these numbers down because I don't think you'll be seeing them next week. I doubt it. And if you're varied in your trading, you'll know what to do. I'm not going to tell you specifically what to do, but we think the markets will come in and the VIX up.
Okay, so we're counting down. We're basically flat for the day, but we're going to see where we are at 4:15 and maybe even into this evening. But we'll keep you posted, and we could be back up later tonight. Not sure. And tomorrow we might give you a glimpse of one of our option trading tools. But thanks for stopping by, Tina. Good to see you. I hope everyone had an interesting day. It was pretty boring in the market. We missed that long. We had it, and they stayed with it longer than we would have thought. But we protected our flank, right? We didn't want the market to score too many points on us and put us down, especially going into a Friday. So with that, we're going to say good night and good luck. You're welcome to visit the website. You're welcome to call anytime, send your questions, and we wish you the best. Take care.